Next up is exercise 8. Sorry if you can hear random noises. I have cauliflower cooking, and it's rattling the pot. 16.8. All right, Roll Company began 2019 with a $120,000 balance in retained earnings. During the year, the following events occurred. The company earned net income of $80,000. A material error in net income from a previous period was corrected. All right, so that's got to go first. Let's do retained earnings as previously reported. $120,000. All right, then we have a correction of, let's see what, material earned net income. The error correction increased retained earnings by $9,800 after related income taxes of $42,000. So it was really $14,000, but they took out the income tax related to it. Correction due to under-reported net income. Net of $4,200 tax. $9,800. Cash dividends. Then we have callable preferred stock, and then we have treasury stock. Okay, so I need to add these two together. And this is retained earnings. Well, I say as restated. The book says adjusted, so I'll say adjusted. Adjusted retained earnings, January 1st of 19. All right, then we're going to add net income. Net income was $80,000. And I like to get a subtotal. And then we're going to have less cash dividends. Cash dividends were $13,000. Stock dividends were $17,000. And let's see what this is. 1,000 shares of callable preferred stock that had originally been issued at $110 per share were recalled and retired at the beginning of 2016 for the call price of $120 per share. Okay, so they originally got $10, probably $10 extra for them when they sold them, but they had to pay $120 to get them back. So you can't take more out of additional paid in than what is already there. So that additional $10 has to come out of retained earnings. So this is going to be, I don't know how to spell it, redemption of preferred stock. And it's going to be, they had 1,000 shares times that $10 difference. Oh. Okay, so let's add these up. And actually, I'm going to put a minus sign in front of it because they need to be subtracted. And that's our retained earnings. At, I don't know what, 1231. All right, and then we're going to have a note because it talks about treasury stock was acquired at a cost of $20,000. State law requires a restriction to retain earnings in an equal amount. The company reports restrictions and notes to the financial statements. So, retained earnings are restricted by the $20,000 cost, of common stock held as treasury stock. And that's it for number 8.